What's going on, guys? It's your boy James, the Forex Prince, back at it again with another good video. And today's video, I'm going to be teaching you about supply and demand. And if that's something that you're interested in, make sure you like, share, and subscribe, and check that noti bell so you don't miss no more videos. All right, let's get right into the video. Here's 8 quick tips for better trading. Tip 1, trade only in a calm mood. Come to these markets when you are level-headed, not worrying about nothing, not trying to figure nothing out, not stressing about nothing outside of the charts. And then if you are having all that stuff, don't bring that stuff to the charts. It's just going to mess up your decision-making, and you listen to that. If you mess up your decision-making process, you're not going to be consistently profitable, all right? And that leads us into tip 2, which is trade with consistent risk. You don't know how many times I see people just throwing lot sizes all over the place, and they're not factoring in the fact that, you could possibly blow your account. Yeah, so consistency comes from doing the same thing over and over again. If you want to be consistently profitable, and I'm talking about see the same regular numbers, then you are to risk the exact same over and over, all right? I for a while, I traded 0.05 for a very long time. Like, I'm talking about maybe a year or two. I just stuck to that, and then I upped it every time I got. Now I'm somewhere Forex somewhere around 5 lots comfortable, and on futures somewhere around, I want to say 4 to 6 contracts comfortable, depending on the market. But yeah, like I said, so let's go right into tip 3. Don't trade for the sake of having to trade. Listen, just because we can trade 6 days a week does not mean you should trade 6 days a week. All right? You have to pick your battles. I only like to trade when news is driving the market. I'm not telling you that you had to trade news, but what I'm telling you is you got to pick your battles, man. You can't just jump in any market. That's how you get chopped up and caught in the washing machine and washed up. So I don't care if you're risking 0.01 and shooting for RR of 100. Risk the same thing until you get it. All right. Tip 4, make your strategy and entry simple to apply and execute. Your strategy should be so simple that you should be able to explain it to a 3-year-old. Here's an example. Here's my strategy. My strategy is basically tops and bottoms. I trade highs and I trade lows. When price seems to be doing one of the two, I'm anticipating the other motion. And I have tons of things to tell me when is optimum time. All right, so like I said, you need everything to be simple. There's an acronym that I want to say, and it's called keep it simple, silly. All right, you got to keep it simple, because if you don't keep it simple and things get complicated, how you gonna understand what you see in the charts? So like I said, come on now, keep it simple, keep it simple. And then for your entry, you want your entry so freaking simple that all you need to do is see it once and you can enter in on your position. If you need 17 confirmations, your strategy ain't for you. All right, you shouldn't need that many confirmations. So get it to be simple so you can easily master it and jump in these markets and crush it. Tip 5, learn how to lose like a pro. Start cutting them losses quick. If the market tell you it ain't going that way, listen. You hear me? Listen to it. Cut that trade. The professionals, they don't take no crazy losses that they can't withstand. And they don't put themselves in drawdown that they can't withstand. So, like I said, make sure you cut them losses quick. All right? Now, we're going to go into tip 6, trade for only 3 hours per day. Anybody in my Discord group knows this for a Physact. All right? Physact. I only trade the first 3 hours of London and New York. Why? Because that's where the most volatility and momentum is. If I take a loss, there's a possibility that I may be able to recover in the remaining of the market that I chose to be in, which is usually an hour and a half before open and an hour and a half after open. So I like to trade pre-market and the first hour and a half of the market for great moves. I trade news at 8:30 and I trade news at 10 o'clock. Those are my times. You hear me? Those are my times. So you don't need to be in here all day staring at these charts. You just need to come in here for a very designated time and an optimum time in the market so you don't get beat up. All right? Tip 7. Master one market and 1 to 2 assets. If you trade futures, trade futures. Don't be jumping all over the place. If you trade Forex, that's where you're at. You hear me? Don't try to bring over that options knowledge to Forex. It don't apply. You gotta change it. So what I'm telling you is stay where you comfortable at. If you comfortable there, stay there. Don't move because the money ain't looking right yet. It ain't there yet. You know what? You know what my family tell each other to tell ourselves when we don't have no money in our bank account? Funds not available. That's it. You'll never hear me say I'm broke or I'm down and out. The funds just ain't there yet. So take your time, master one market, and then inside of that market, master 1 to 2 assets or pairs. This way, if one pair is chopped, the other one should be trending. My favorite pairs is gold and AUD USD, if y'all don't know. So, like I said, make sure them pairs is trending. All right? Tip 8, always journal your trades. I don't care if you're doing voice memos. Always journal your trades, because when you have a bad day, them journal notes is going to pull you up out that grave. You hear me? Always, always, always journal. That is our lifeline here. And I got a challenge for you. All right? Since that we at the end of these tips, I'm gonna give you an extra tip, and it's the part. It's tip 8, part 2. All right? What I want you to do, your first entry inside, get a new book. I don't care if it's a voice memo. Like I said, start over. We in the month of June. Every month should have a new book. All right? We're not sitting here and keeping a book from 7 years and just adding entries. No. Every month has a new book. New book, new outcomes, new opportunities. All right? So on this first section, before you do anything, journal anything, I want you on your first page, first, second, or third, whatever, how many pages you write down, why do you want to be successful in Forex? Why Forex? Write it down. I don't care if it's 5 pages. Write it down, because that 5 pages is what's going to drive you to come in these markets and do what you're supposed to do. You hear me? Take that challenge, man. Put that thing on there on that first page, and then every day before you trade, go read that. Let that amp you up. That's some psychology tips for you. So let's go ahead and get right into this video. All right. So if you see, we are looking at gold on the weekly. I am getting ready to show you how I drew up my supply and demand levels. So pay attention, because this is going to be really quick. It's not that hard. All right. I have 2 boxes, right? This box right here is the demand zone. This box right here is the supply zone. All right. Inside of this supply zone, you're looking for sales. Inside of this buy zone, you're looking for buys. The reason I did this is look how many times wicks just stopped here. Price was here in this area for a minute. For a minute. Same as this, for a minute. So I'm counting and factoring in this right here is oversold. This right here is overbought. So I'm factoring that in. Let's drop down in time frames so we can see what it looked like. Let's go down here and look at it on the daily. Look at that. Look how I marked that up. Look, price came up through this supply. Or no, my bad. Demand came through this demand, shot up here in this supply area, and came back down. Bounced off this demand zone, came back to supply. Couldn't break. Came back down inside the demand zone, but could not keep an entry or a candle below it. So it came back. Look, rejected. Came back down, rejected. That's why I got these lines here for. These lines is really the level, but the boxes is the zone. So if you know zone to zone trading, when you do zone to zone trading, you have multiple zones. So a zone is down here. Supply, demand. See this box? Supply, demand. Same thing here. Look, look, look. Look at that. I was counting on it. Look, supply and demand. I see it. I don't have to hide or draw up 70 different things. Demand, supply. Price couldn't break demand, couldn't stay below it. So I got an entry for my supply. Look at that. Look at that. Let's go down to a more reasonable time. Let's look at the 1 hour. Okay? Let's look at the 1 hour. Zoom. I want all of that. I want all of that. Look at all of that. Look at all of that. I know it's not clean, but still. Couldn't break the bottom of the box. Came back up. It broke out. We could have got us a good little trade here, but it would not stay out. It would not stay outside the bands. We looking to enter in this area somewhere. Come back down. Look, it rejected. All right, we on the hourly. So let's look at this right here, right? This was damn near this week. Look at that. Look at that. We got an entry out here somewhere. Watch. Hold up. Come on. Slide. There we go. Look at that. I'm right at the cross. Right at the cross. Entry right here. And we in. Look. Right down here. We're looking for another entry. Look down here. Cross. Exit out the bands. Green cloud. We in. We in. Alright? That's all it takes. Look. Outside of the bands. Compare it up top. Outside of the bands. Compare it. Outside of the bands. Not outside of the bands up top. But we got a valid entry. Now if I drop down to the 5 minute, my favorite time frame to trade all this. This was today's buy. Look where the entry was. Look, we got held up here. Entry was in this area. Look down. Entry was in this area. Got a cross right there. We had a little bit of drawdown. But entry right there. You would have held that. Jesus Christ. So like I said, supply and demand is basically, let's come to the daily. Supply and demand is basically what Banks is looking for, all right? They're supplying momentum to give us a discount on the premium. Premium is the price. So we needed a discount. This was too high to try to buy gold in the buying market. So they brought it back down here. Gave us another buying opportunity. Look at the cross. Look at the cross. End on these two candles. All right. So that's how I drew it up. I draw my boxes like that. So what I would do is I would draw support first. This is a green line. Then I would draw resistance. And then you get your demand zone and supply zone and demand zone drawing up on the higher time frames. And then as price goes on, all you do is just drag it until we get another broken level. Hold up. Undo. Nope. I just undo both. I ain't beat. So yeah, that's all you got to do. Right now, price is outside of my supply zone. We are going to look for some rejection so we can get back in. All right? Supply us with a discount to buy gold because gold is too high to buy right now. All right. So like I said, if this video found you well, make sure you like, share, and subscribe. Make sure you comment down your favorite pairs to trade with your favorite time frames, and just let me know. All right. Just let me know how you doing, how you been these days, how your mental. All right. Let me check in on you. Make sure you're good. So I hope this video found you well. I will make sure that this is all time stamped and the description's got everything that it should have. So you just bear with me. And I'm going to get y'all right, all right? So I thank y'all. Have a blessed night. Love y'all. Be safe.